business combination that is achieved in stages. It is also called step acquisition, and it happens when acquirer obtains control of the acquiree in which it is already having equity interest. For example, earlier entity was having 30% interest, and later on it acquired 30% interest more and obtains the control of the acquiree. In that case, it will be called as a business combination that is achieved in stages, or will be called as step acquisition. Similarly, in joint venture also, it is covered under IND AS 111, where acquirer obtains control of business in which it is having right to assets and obligation just before taking control. And in both of the cases, we need to remeasure investment to fair value as at the date of gaining control, and we need to recognize any gain or loss on the remeasurement in profit and loss account or OCI as may be appropriate. And in prior period, whether acquirer had recognized changes in value of equity in OCI. In that case, we need to check if it has recognized earlier gain loss in fair value change in OCI. In that case, we need to recognize the gain loss at the date of gaining control in the OCI in the similar way that if the acquirer had disposed of previously held equity. It means that if this equity investment is measured by the acquirer earlier at FVT OCI, in that case, any change in fair value will be booked in FVT OCI. And if earlier it was measured and change in fair value is booked in FVTPL, in that case, the change in fair value at the date of gaining control will also booked in FVTPL. And if earlier it was not recognized in OCI, in that case, acquirer will book any result in change in fair value at the date of gaining control in profit and loss account.